Welcome to Trending Tickers episode 4. In this episode, Yelp announces uncertainty during this coronavirus pandemic. Yelp.com is a crowdsourced local business review website announced on Thursday, April 9th, that Yelp will lay off 1,000 staffers and furlough an additional 1,100 workers, approximately 35% of its workforce. The company will also cut back on hours for others as it takes steps to get through a period of substantial uncertainty, according to the email from co-founder and CEO Jeremy Stoppelman addressed to his employees. The email concluded that Yelp's most popular restaurant category fell down more than 64%, while other categories such as gyms, nightlife, and beauty businesses fell as much as 83%. Jeremy mentioned, with physical distancing and shelter in place, orders have came as a huge blow to the business. With the duration and impact unknown, Yelp had to make drastic decisions to cut operating costs as they deal with this pandemic. While coronavirus pandemic was to blame for the layoffs, there has been significant signs for slowing down at Yelp before we knew about COVID-19. February 13, 2020, Yelp released fourth quarter earnings for 2019, and it was a big miss with 35% year-over-year decrease of earnings and unable to beat census revenues estimates in the last 4 quarters. We see from this chart that Yelp has peaked in second quarter of 2015 and it was a downslope afterward. While still posting revenue, the company is not growing at a fast enough pace to make up for its expenses and inflation. Yelp's website has also been seeing a decrease in traffic as Google, TripAdvisor, and Foursquare are taking a share of the market. Based on Alexa's historical traffic trends, we see a continuous decrease in Yelp's traffic starting back in September of 2019 and losing dominance to TripAdvisor in December of 2019. With Yelp's traffic and revenue dwindling down, layoffs might have been anticipated before the pandemic. One of the strongest reasons for their lack of performance might be their reputation.
Ratings, Yelp says they've developed an algorithm to screen out fake reviews. But a lot of business owners say what Yelp is really doing is extorting them for advertising money.
Federal Trade Commission has received thousands of complaints about Yelp from businesses across the country claiming fraudulent negative reviews have cost them big profits. One well-known company in Springfield is fighting back, and so far, the courts are siding with the business.
To Hadid, the negative reviews replaced positive ones only after he decided not to advertise with Yelp. Some of the negative posts were from anonymous sources, leaving Hadid to wonder where they came from.
Yelp dropped 6.5%, the second big drop in a row. The Federal Trade Commission has received 2,000 complaints, some of them reportedly alleging the company used extortion to win advertising.
Well, small business owners call it extortion. They say their positive reviews can suddenly disappear if they don't advertise with Yelp.
Yelp announced Tuesday it was partnering with GoFundMe.com to help people donate to businesses being hurt by the COVID-19 pandemic. The idea was for customers to have an option to donate directly through Yelp pages, with all the proceeds going to small businesses. But Yelp added the GoFundMe pages for businesses listings without notifying the business owners first, resulting in a blowback that caused Yelp to suspend the program. It's actions like these that gives Yelp its reputation. Billion Dollar Bully is a documentary that was filmed last year specifically targeting Yelp for its sales practices. With the official trailer coming out in 2019 on YouTube, the audience made sure to speak up, and we are talking about hundreds of small business owners confirming all of the allegations, including extortion, fake reviews, bullying, unethical sales practices, solicitation calls, and emails as much as 3 to 5 times a week, and filtering reviews for negative reviews to appear higher. Take a look at Yelp's verified employee reviews on Indeed, which received a 3.5-star rating. The latest review is from March 22nd of 2020, confirms Yelp's shady and unethical sales practice to do everything to get the sale closed. It also mentioned that most business owners call in furious, unaware what they're actually signed up for and paid for. The review goes on to question impressions and clicks that business pages automatically receive after paying Yelp, but not receiving a single sale. Lastly, the review mentions that filtered reviews are indeed real and they are manipulated to win customers. As we read on, it's obvious that Yelp is just churning their employees with daily 100-call minimum goal to harass and bully business owners to win the sale, ethically or not. Most sales are a one-time transactional only, as business owners understand that there's no value in Yelp's advertising packages. Perhaps that is why the sales are dropping, as it's harder and harder to get new customers without having repeat customers. Yelp has responded to these reviews and encouraged employees to have honest conversation with their manager about some of the concerns they have. As we see, currently the outlook for Yelp does not look promising, but the layoffs cannot be all as a result of corona pandemic. Yelp expects to incur incur $8 to $10 million in termination and furlough costs. It is also looking to explore additional opportunities to preserve cash, increase liquidity to protect the financial health of its business. Yelp stock is down 38% year to date, while the S&P 500 has dropped 15%.